Hey, what's going on, everyone? I hope you're having a great day. The three major indices were all green today, and I hope your portfolio was too. I'm Matt, and in this video, I will be doing a technical analysis update on the Nasdaq 100, Russell 2000, and S&P 500. Make sure you stick around until the end because I will be reviewing a seasonal trade that profited just over $1,000. If you're interested in this type of content, hit the subscribe button and don't forget to turn on your notifications so you don't miss any of the timely videos. It would be greatly appreciated if you could hit the like button and leave a comment because it really helps with getting this video in front of other people. Alright, let's get started. If you're solely interested in the seasonal trade review, jump ahead to this timestamp. Before we jump into the technical analysis, you should know that the initial jobless claims report will be released on July 16th at 8:30 a.m. On top of that, there are some important earnings reports coming out on both the 16th and 17th. Key companies in the financial sector such as Bank of America, Morgan Stanley, and BlackRock will all be reporting. This is definitely an important sector to be paying attention to, but I'm personally most excited by the technology industry, which is why I will be paying attention to Netflix's earnings report. I recently did a stock analysis on Netflix. If you're interested in that video, it's posted in the description below. Speaking of technology, here's the daily chart for the tech-dominant Nasdaq 100, which is tracked by QQQ. This index has been in a bear flag since April 20th. These do commonly break downward, but obviously that's not guaranteed. Whether it continues to trade in this channel, breaks upward or downward, you should know what support and resistance to be looking for. Since we are close to all-time highs, there isn't much resistance above. I would be watching for a bounce off of this top trend line, and then that would be followed by the previous high of 269.79. If the bulls can't keep the market above this middle trend line, I would be looking for support at 252.76. Below that, I would expect there to be demand found off this bottom trend line. To get a more granular view, here's the 2-hour chart. This time frame does a better job at showing you how we closed at the previous resistance on July 7th. In order to test this upper trend line again, the bulls first have to get the market above 262.69, which served as resistance in this area. If the bears fail to protect this upper trend line, that would set up a test at the all-time high just below 270. On the other hand, if there is bearish strength in the short term, I would be looking for a bounce off of 256, which was previous support and now aligns with this middle trend line. If the bull camp cannot protect this, that would then set up a test of 252.76. And of course, a reach goal for the bears would be this bottom trend line. Recently, the Nasdaq 100 has been the index that has been leading the charge and posting impressive gains. The Russell 2000 hasn't been doing as well, but it did post an impressive day. For 4 days in a row, IWM closed below this bottom trend line. Many people, myself included, thought this would lead to a test of 136.49. And if the bears push the market below that, that could lead to a test of 133.28. As you can see though, the Russell 2000 gapped up into this wedge structure and closed at the previous resistance of 146.69. If this market can push above this top trend line and hold, there's a good chance it would test its high from early June at 153.09. To have a better idea of what to look for in the shorter time frame, here's the 2-hour chart. Today's close was at a previous resistance, which also marks the upper end of a range which started on June 16th. If the bears cannot defend this region of the upper trend line and the top of this range, that could set up a run to the high from June at 153. Keep in mind that this scenario could be stopped just short of its target because of this gap. Gaps are areas where the supply and demand hasn't been tested, so you never can be too sure of how the market will react, but it is statistically common for them to be filled. If the Russell 2000 can't make it above this area, I would expect there to be support at this bottom trend line. If the bulls can't hold this, I would then be looking to see how much demand there is in the low 136s. Keep in mind that the Russell 2000 has been lagging behind the Nasdaq 100 and S&P 500, so the strength it showed today was interesting to say the least. Speaking of the S&P 500, here's the daily chart for SPY. Today was the second close on top of this primary wedge structure. If the bulls can hold this, I would expect there to be a test of the recent high in June at 323.41. If the bull camp shows some serious strength and pushes the market above this, we could be setting up for a test of the all-time high at 339. However, if 323 is rejected, the first support would be this middle trend line. Depending on how quickly the market moves, the next support would be this top trend line. If the bears push the market through both of these, I would then be watching 310, which aligns with the bottom trend line. If it were to happen, I don't think it would be anytime soon, but a break downward from this primary wedge would set up a test of the high 290s. For those of you who are more interested in a shorter time frame, here's the 2-hour chart. This is the high from early June that, if broken, could potentially set up a run for the all-time highs. If the market is rejected at this resistance, I would expect there to be support found at 318. This area roughly aligns with two trend lines and two previous points of resistance, which commonly turn into support. If the market is pushed below this region, I would then be watching 312, which has found support on 3 separate occasions and was an area of consolidation in mid-June. A reach target for the bears would then be 308, which aligns with this bottom trend line. Here's how the S&P 500 looks on the futures market. As you can see, it has the same primary wedge structure and it's close to testing the recent high at 3,231. Even though the chart is similar, it's not the exact same because the futures market has a 23-hour trading period. I just wanted to quickly bring this to your attention because it's one tool you can use to track the market outside of normal trading hours. On top of that, it's also the asset class I utilized for this month's seasonal trade. This platform is TradeStation, and it's what I personally use to place trades. On the right side of the screen is the chart for the S&P 500 futures market, and on the left side are the historic performance results for this seasonal trading strategy. If you're interested in the exact details of this July trading strategy, there's a link in the description below. To give you a quick summary, there is a statistical advantage to buying into the market on the 8th trading day of July and then exiting after the first profitable close. For this year, the 8th trading day of July was on the 13th, and this strategy took a long position when the market opened at 3,183.5. Then the closing value on the 14th triggered an exit, so the position was taken off when the market opened on the 15th at 3,204. Because the futures market is highly leveraged, this gain of 20.5 points was a profit of $1,025. This strategy trades once per July, and these are the results all the way back to the year 2000. Because it trades once a year, there was a total of 21 trades. 19 of those trades were winners, 2 were losers, so the accuracy was just over 90%. Based on a trading lot size of one futures contract, the gross profit was over $12,000 and the gross loss was $112. When you compute this ratio, the profit factor was over 110. If you don't care to trade on the futures market, you should know that this strategy worked on the SPY as well. Keep in mind, I'm not simply showing you a trade I made money on. I created a video about this strategy 2 weeks before it took place. I will continue to make videos on seasonal trading strategies before they take place so you can track them in real time. If this is something that interests you, subscribe to the channel and don't forget to turn on your notifications so you don't miss any of the new videos. If you enjoyed this video, let me know by hitting the like button and leaving a comment. Thanks for watching, and as always, best of luck in the markets.